Yeah, so I think a big topic of discussion today has been the fact that there's a lot of money coming on chain. Traditional finance institutions are moving on chain, and a lot of funds have a lot of money. But as a lot of founders these days know, it's really difficult to raise money. So if you had to tell me this, I'd ask you, are these founders in the room with us right now? And that was supposed to be a joke, even though we've literally got a lot of these funds in the room with us. But I guess the key takeaway is that the chains are very quiet, and that's very telling. Bitcoin's mempool is currently razor thin. We're sitting at an average of 1,900 pending transactions, where we had 40,000 in the last bull run. Fees are down, and things are looking very, very dire in terms of chain activity. And even if we move away from Bitcoin, Ethereum's price action has been super disappointing, despite everyone complaining on Twitter. And even roll-up growth and adoption has been plateauing for quite a while. So we know capital is pouring in and excitement and sentiments at an all-time low. And if we want that needle to start moving and that activity to start coming in, we need to start innovating, tackling the same problems from a different angle and getting people excited. So like I just said, institutions are here, we just can't see them. All your big players and big funds, your big traditional funds like BlackRock and Fidelity are all moving on chain, but outside of some ETFs and some Bitcoin treasuries, they're not making much noise. And the big problem is that capital's not flowing on or through the chain, it's kind of parking on top of it. And it's showing us the big difference between institutional capital deployment and true institutional adoption. Buying a lot of Bitcoin and storing it in a bank vault isn't adopting the technology. And it's easy to understand why this is happening. DeFi friction is real. It's really difficult. Onboarding people, understanding risk management, and even understanding why we need to be using this technology isn't that easy. But to us, this was kind of an opportunity hidden in plain sight. It's, to me, a classic early market indication, the fact that money is piling up and waiting to be deployed. It's just waiting for this kind of next infrastructural leap to take the lead. So why is there all this kind of buzz around Bitcoin? We all know it's slow, it has low utility, and it's definitely not the decentralized supercomputer of the future. But it's honestly the institutional comfort zone. It's got time in the saddle. It's spent a long time proving its security and stability. It's truly decentralized. And if I had to ask everyone here to kind of take out their phones and invest in an asset, any asset, Bitcoin's by far the easiest asset to go to. It's definitely the one I jump into. And while all this holds true, institutions aren't looking for speed. They're looking for finality and security. Imagine you're now a fund and you're trying to send tens of millions of dollars across the globe every week. This is taking you days. It's costing you tens of thousands of dollars. And if I had to present you two solutions, in option one, we've got, we can take your finality and your settlement down to 10 minutes. It's going to cost you $1, and you've got all the security and finality that you need. You've got peace of mind. Or we can take that settlement down to a millisecond, but you're going to start sacrificing on kind of the properties that make you secure and ensure that your transaction is going to land. It's kind of a no-brainer. There's no reason that you're already moving from 4 days or days at a time down to 10 minutes. Why do you want to go down to 1 millisecond? So the key takeaway is that your big funds, your traditional institutions would much rather have security, longevity, true decentralization over like 1 millisecond settlements. So we've just discussed it. Bitcoin's got a bit of a scaling bottleneck. It's got 10-minute transactions, which is really long if you're trying to buy a coffee. And fees get expensive, especially in the bull market. But this paired with a layer of trust presents an opportunity, a real opportunity to kind of deploy capital on Bitcoin, and it's already being picked up. As Trent mentioned in the previous panel, there are DeFi protocols being built on top of Bitcoin. Stacks is a good example. It's a side chain that kind of uses Bitcoin as a roll-up. They're anchoring data to kind of prove their stay in state, so that they can operate with less security while leveraging Bitcoin's consensus. But they're really missing a key piece of the puzzle that is going to unlock this capital deployment. So what if we just kind of took a step back and changed our perspective and took a bit of a paradigm shift into how we're looking at smart contract computation and decentralized finance as a whole. What if we didn't marry every single thing to a blockchain, used it to kind of anchor some data, but also ultimately use the blockchain for what it's best at: consensus, finality, settlement. Rollups like Optimism and Stacks are already doing this, but what if we took it a step further? What if we just said, why don't we not make a new blockchain? Blockchains are really expensive, slow, cumbersome machines that require a huge network of nodes to come to, a lot of agreements to kind of just prove a little piece of data is correct. If we're not building blocks, we've got no need for consensus. We've got no need for staking and proof of work and slashing and punishing bad actors. So we saw a bit of potential here, a gap we're filling with SEL. It's a smart contract tooling and tokenization platform built on top of Bitcoin, offering kind of institutional grade infrastructure without compromising any of those properties that make Bitcoin this amazing, valuable asset that we all love. The idea for SEL, or simple contract language, really came from a paper we read on client-side validation written by Peter Todd in 2016. Now, the main idea wasn't client-side validation that took our attention, but rather the proposal of off-chain computation. This idea that it was kind of silly for us to have the blockchain run all the world's computation all the time. So we went to work and developed a network that runs super lightweight, deterministic smart contracts. That being that if any person in the world had to run that smart contract at any time, the outcome would be always exactly the same. This way, anyone could prove that they were doing the right thing without having to be punished or submit transactions. Yeah, so as I just said, this eliminated the need for gas, consensus, and all we needed to do was prove that someone spent a little bit of Bitcoin and anchored some data in order to authorize these computations. So we launched our network, and we've listed on a major exchange, and we're seeing a huge uptick in projects that want to jump on. We're onboarding projects that are interested in on-chain governance, gold-backed stablecoins, and the likes, and it's really, really exciting to see a bit of drive in this. But what we're really interested in kind of attesting is that we're paving the way for innovation and trust in a scene where institutions and investors are getting cold feet. So what I think is kind of making this special is that we're not just trying to compete and cut market from competitors and poach users and poach adoption, but rather build on top of existing infrastructure and utilize existing decentralized infrastructure. For institutions and for your institutional users, what this means is that growth and stability on Bitcoin is growth and stability for SEL. For your retail users, any scaling solution on Bitcoin directly benefits us. We're able to plug into the Lightning Network already and fund Lightning channels with SEL assets, route these assets at 1 million TPS at a fraction of the cost of any other blockchain. So, any scaling that's happening on Bitcoin is directly benefiting us. And what this does is creates a kind of harmonious environment where what's good for Bitcoin is good for SEL. Bitcoin stays the settlement layer, the true hard money that we've come to live and love and use in our daily lives, while we capitalize on that, untapped utility, that liquidity that's staying stagnant. And there's a powerful narrative there. It comes from moving away from this kind of traditional idea and this kind of traditional idea of tackling DeFi problems and seeing how we can bring new products into the space. The sheer potential in the scene, we've already had the likes of Trent and Melissa mention Bitcoin DeFi off the bat in the previous panel. The sheer potential is up for grabs and it's enormous. And we're already moving forward in a new direction because, let's face it, adoption isn't going to wait around. We're not going to be interested in, the next EVM clone or the next new fork of an existing chain that's just trying to compete and poach revenue. We're out here trying to inspire everyone to kind of take a look at the same problems, but instead of solving them in the same way, take a different angle, take a unique spin, and try and solve things in a way that someone hasn't taken that approach before. We're also looking for partners. We're onboarding projects and builders. We're looking for funds and innovators that are sharing a mindset with us, that are really interested in building with us. So if you're interested, come have a chat. And that's because we're really building the rails for the future that we believe in. I'm going to leave you with a quote that wasn't written by ChatGPT, was written by yours truly. and that's that, you know, the future belongs to those who build the bridges that others walk across. And I think that's a powerful message to leave off.